Mr. Sikri, good afternoon. Thank you so much for your time. How's your ambition at RPG Life panning out? I remember talking to you some 3-4 quarters back, and you had given us the areas you would like to focus on. Much of that ground has been covered. Shareholders have been rewarded. But what next? Where exactly do you see much more scope? Is it profitability or geographical expansion, top line led? Where exactly do you see scope?
Um, First, thank you so much for inviting me on your channel. And adding to what you just mentioned when you were commenting about RPG Life Sciences, RPG Life Sciences has been able to register a consistent upward trajectory, not for 2 years, but for last 5 consecutive years. Every single year, our revenues are consistently higher than the market. Our margins, whether it is EBITDA, PBT, PAT, even gross margin, is higher every single year. There is not even a single year where there's even a slight blip. In line with this YTD or 9 months results have also been following the same upward trajectory, and which you have seen in terms of the growth are above 30% EBITDA. Our revenue growth is 18% compared to the last year. And this has happened not in one business alone. We have 3 businesses: domestic formulation, international formulations, and API. In all the 3 businesses, we have significant basis points increase in the margins, as well as the revenue growth has been higher. Now, you asked me about going forward. I personally feel we have a great strategy lined up. And that strategy, distinctive strategy, which we have for domestic formulation basis, the 5 pillars of growth. Similarly, we have for international business, 5 pillars of growth identified, and a significant progress is being made in the 5 pillars of domestic formulation as well as on international business, which is what will drive our future growth trajectory. Just to exemplify, in domestic formulation, we know our one big pillar was the product portfolio rejuvenation. We have identified close to 80 products on a 3-year span of period, and we have launched almost 45-50% products. They contribute today about 27-28% to our turnover, and we have another 35-40 products identified which will contribute in the future going forward. Similarly, we have a very big advantage of having textbook products in domestic formulation business. We have been able to capitalize on that. We have extensive life cycle management strategy. We launched close to about 10 to 12 line extensions. They are helping us to make our domestic formulation textbook brand bigger. We are very optimistic to see our first 100 crore brand called Neprosin to come recently in the coming couple of years. And I'm also happy to share with you that we have a niche portfolio of immunosuppressant that's also likely to be over 100 crore going forward. And similar strategy is now for international business. International business, we have very, very important driver is our plant should be modernized. I'm happy to share with you. We have spent over 100 crore capex to modernize the plant. We will that exercise should get completed by the end of this year, and the new product lineup in R&D for the international business also exists. So perhaps that answers the question which you asked about the future.
No, sure, Mr. Sikri, that does give us a comprehensive understanding as to which are the levers available, but it all comes down to numbers, right? If I have your 9-month trajectory right, you are close to 450 crore on the top line. Given the various levers you talked about, and the fact that you had earlier mentioned that inorganic growth is also perhaps something you'll watch out for, what could the revenue profile of the company look, let's say, 18 months, 24 months out?
From your perspective, it's a valid question. From my perspective, I can only look at the growth levers to give reassurance to our investors and to your viewers that we have a great lineup of new products, new customer, new market in case of the international formulation business. And I think the way we look at it, we are currently at 455 crore. I think the next obvious target could be 1,000 crore for us, and we would like that 1,000 crore target to be achieved ASAP basis the levers which I just talked to you about.
Crore target will come at what kind of margins, sir? Do you have scope for improving margins further from here?
Yeah. I think that's also a very, very, very valid question because there has been a consistent uptrend in the profit margins. Our goal is that we have a profitable growth. So we will not like to compromise on the margins. That's our strategy, and future growth should also come with the margins which you see now. And I even expect some basis points increase going forward because our revenue get added and our fixed costs being kept under control. We should flow into the gross margin. We should also flow into the EBITDA and PBT and PAT going forward. I also mentioned to you that all the margin improvement has been a structural story, both on the COGS front as well as on the OPEX front, which I expect likely to continue. Any addition in the revenue should help us to up the margins by a few basis points going forward.
Okay, so all poised for growth, a lot of levers available, not in terms of growth, but the structural improvement that we have seen in earnings and the way international business has been growing. Thanks, Mr. Sikri, for making time and speaking with us. Appreciate